Hello traders, welcome to FreeFX. I'm Francesco. Today we're going to look at the charts while the market is still open. We've got about 3/4 of an hour left to the end of today's trading. I usually wait till the end of the market, but it's only 3/4 of an hour, so I thought I might just get started on that. It's been quite an extraordinary week, never mind day. We've had the Fed obviously on Wednesday. My last video was on Monday, so this is the review for the whole week, so lots has happened. So let's go to the charts without further ado, and this is what we're actually looking at, the S&P or SPX if you like. I've got quite a few things I've added to the chart, but mainly what you see is what I usually have, which is the CCI here at the bottom, Bollinger Bands around the SPX candlesticks, and then two moving averages. Now there's a green line that's appeared there as well. And I've got this monthly 21 weighted moving average barrier there, or if you like, peak that we reached. So anyway, let's talk about the week. So this is the daily. So counting back, this is today. So Friday, Thursday, Wednesday was the Fed rate decision day. Obviously, much anticipated, as I said in my Monday video, it's going to be 75 basis points, which it was. So 0.75 went on the docket, no problems, and that was announced, and that's what came to pass. However, they did talk about obviously other things, such as forecasting basically further GDP contraction from the earlier estimate. I think it was 1.7 down to 0.6. Don't quote me on that, but something like that anyway. It was fairly significant as a sort of signal for a recession. Now, we know that the pound has suffered a lot. Cable, GBP, USD has suffered a lot because of the Bank of England sort of forecasting a recession basically earlier this year. And so it wasn't just dollar strength, because the dollar is basically dollar index is a basket of currencies. So that pound drop also influenced in turn. It's a bit of a chicken and egg. What causes which is hard to know, but sometimes. But basically, the Fed saying that we're going to basically contract GDP as a country. That forecast is obviously negative for a lot of things, not just the economy, but eventually, because companies that are in the S&P, for example, or any other sort of index, are actual company relying on profits, and so a recession might have a sort of oil spill kind of effect. It's not just kind of wider than it's sort of initially thought. And this does affect the stock market eventually, sort of in a roundabout way. It's bad for stocks. So recession is an opportunity for some, but generally speaking, it's not good for anyone. So this is the result of that Fed rate decision. It wasn't so much the rate, but it was the terminal rate for the year, which is up to 4.6%. So there might be obviously other 75 basis points hikes in November and December, and then the GDP sort of downgrading. So all of that combined caused a really large candle on the day, which nobody really expected. Thursday was a bit of a sort of up day, and then the long wick there, if you can see, basically told us no, we're not going higher. Today was a big down day, but it seemingly was very quiet sort of through the night and into the morning, and sort of steadily started kind of creeping into this, and then we just posted this long wick here at the bottom. Now this is the June lows. As you can see, I basically just put a line there to help me sort of visualize that and help you see that as well. So the June low, 16th of June, came after the downtrend that started in January. So that's been on everybody's mind, sort of, are we going to take out the June lows? And sure enough, today looked like it might just do it, and it's sort of, basically stabilized around those levels and bounced up. So on the CCI front, before we sort of go down to small levels, on the CCI front, we've got this minus 200, and I put a tweet earlier saying that we've not had many sort of pushes below minus 200 in recent history. So now this one was just below, and that was on the 26th of April. The one a little bit considerably below was here in January. So really, apart from this slight push here in April, we haven't had a proper push below 200 negative since the 24th of January. So essentially since the start of the year. And what happened in these two situations, let's look at the January one. we had this big push in January, obviously, there, and then it bounced up all the way to the basis and beyond until the 9th of February, and then it started pushing lower. Okay, so based on that alone, we could probably see a bounce here because we have sold now for the entire week, and then the previous week there was a big sell as well. Okay, so it's pretty significant. I mean, you've got to admit, the CPI day, Tuesday the 13th, was pretty big down, and then we just came off that 0 level on the CCI, which I said was going to sort of start acting as a barrier, which it did, and then we had this big push down. So basically we've been selling since the 13th of September. We've had these sort of long runs and the bounce, long run and the bounce. So I expect we might get up to this level here, which is what is it, 3890, something like that. So basically where the 21 WMA is, 3895 around here. So we could bounce up to about then. Obviously this is going to go lower as it sort of adjusts to the recent price move. So it could be 3880 or something like that anyway. So we might get up to these levels, 3860, something like that. So I have gone long, as you can see. I'm in a trade. I'm up at the moment, and my target is basically the top of this candle. Because I've actually put my target through the 4-hour chart rather than the daily. So within the 4-hour sort of time frame, this would be my target rather than up here. So I might obviously take the next trade up, but for now I'm actually going for a more conservative trade. There's my target there under the 21 WMA, but in the 4-hour. So back to the daily. That's where we are. We come off the June lows and we've just started to. Now in April, that was my other example. What happened in April is interesting because it's a bit more mixed. So we came up to the 200 negative CCI, which measures basically performance compared to past price history, and that's when you get sort of divergences, etc. So, and also the 0 and below 0 is negative and above 0 is sort of positive. It's an unbound oscillator, but actually when you look carefully, I set it to 200 because my observation is that 200 is the kind of limit. It is sort of bounded by the price history of this index, is that 200 positive and negative, plus and minus, is possibly the limit. But you have these sort of peaks and troughs. So in the 2008 bear market, we went well below 200. In fact, I think it was nearly 300. But that was just an exception. Most of the time, it's actually not as deep as that. Same to the upside. So the 26th of April here was a bit more interesting because, as you can see, we came down to this level, which was 209 negative, so just below. And then with this big move, and then we had essentially, you could box this up. And it's like a range. So we had a bit of a range there, and that lasted until the 5th of May, 26th of April to the 6th of May. And then we came down and set new lows. So, you know, the CCI sort of crept up to minus 59 there, and then sort of followed price lower from then on. So it didn't go all the way up to 0. It sort of stopped there and then came lower. But then actually started going into higher. It didn't really push down below, and then we had this bounce up. So we did have a proper bounce, just kind of push lower and then a bounce, and the bounce didn't really get to these highs, so the bounce was only up to, you know, about halfway through these candles. So a bit of a mixed bag there. So you can't always rely on a bounce off a 200 negative to be a clean affair, so to speak. And then if we go further back into history, you'll see that just there in on the 1st of December, we had a push lower, and that was minus 261, so a fairly deep push. This one was clearly a bounce. We had one day, the next day was basically a retracement of that previous candle. The second day was down, but not all the way down, and then a bounce, but again we got into a range, and another bounce came up here, and it sort of leaned on the minus 100 almost to to that point there. So then we can measure these and talk about percentages, sort of how much they rallied or how much they dropped, etc. But essentially, it is likely that we have some kind of reaction here. So I've kind of, obviously you have to bet as a trader. I bet on this being a bounce, and that's what I've come up with. Bollinger Bands are severely stretched here. Interestingly, when we have these stretches, we tend to have an expansion, both ends, but we had the expansion at this point, and now they're just both pointing down. And when both are pointing down, it tends to continue. When you've got an expansion like this, they tend to then shrink. So like this one here, you can see they shrank. This one here, then they shrank. These ones kind of expanded and they shrank. So when you've got basically like parallel bands running down, it's going to continue for some time, potentially. So this will continue, but I'm just talking about a bounce, and that's healthy. You still have these bounds movements between the moving averages and one of the bands. So that's a healthy way of trending. So I'm just not changing my kind of bias. I'm just sort of within that trend and taking a shot to the upside. It might just come up to halfway here, which is basically the target on the 4 hour. Will be about there, I imagine. Oh, it's here actually. So, but yeah, overall, I mean, it might just come up to here, so maybe double that and then continue lower. So you can see it's not always like, you know, that's a big long bounce there, but sometimes you don't get that full bounce. You might get up to half, like here, and then you're back to the band and so on. So could be messy, could be not, we don't know for sure. What's really interesting is the VIX. So let's have a look at the VIX here, because there's the VIX. So we were kind of, I was saying the other day that the VIX is sort of stalled around here, you know, that was pretty poor. It's the 23rd today. So 19th was the Monday, and we were just kind of loitering around these numbers. And then 20th we started going higher, and today we had a big uptick. So we're now at 30, well 29.88, but let's call it 30 here, which is we've not seen since June, middle of June. Okay, so that's a big push. And I'd say that's quite significant. So, and you can see the extreme push higher. And then there's been a lot of talk recently about manipulation of VIX options and basically trying to push the VIX down with an eye to kind of backward manipulation of the S&P that way. So by reducing volatility to keep it buoyant and so on. Barclays and other banks are being sort of sued for this, which is malpractice, I believe. So that's once that's stopped, it seems that the plug has been taken out of the bath and everything's come rushing through. Maybe a coincidence, maybe, you know, it is basically what the system needed, a so-called royal flush, and just flush things out that have been kind of stalled and waiting for something. We had the Fed push, then we needed something more, and I think we've got that today. So that's basically all I was going to say about the daily. Then we can sort of go down into lower time frames. Now, what's interesting about the 4 hour, I'm just going to take the VIX off. The 4 hour is quite good for divergences more than a daily, because they're more immediate, more actionable, if you like. So you can see this from the 7th to the 13th of September, which I talked about on my other video. And that's what you get. It's the divergence negative to the downside, price goes up, and then, you know, roughly 6 days into that, it goes oops, and bam, and we get that move. Then the two kind of go together. In step, we get to this big day here, 21st, that's the Fed day. It goes from basically, there's a peak there, band to band, all the way from higher band to lower band, and we get this big drop on the CCI. bounce the next day, and then stall. So this other divergence, I couldn't think of a name, so I called it a neutral divergence on Twitter, on my tweet, because it's sort of neutral. So it kind of basically flat line, more or less. I call that a flat line because it sort of looked like that earlier today, and then it got a bit more shapely. But so the flat line in contrast to the drop, resulting in a warning sign. As I said, sometimes this doesn't work particularly, but so these are the two recent divergences that sort of eventually price responded to that, and then we had this sort of flat period. I've looked for other similar kind of so that's around the 100 level, which is acting as a resistance. So I was looking for similar sort of drop down below 200 on the 4 hour, and then bounce up to 100 and some kind of turn. This one went all the way up to 44 roughly, and then turned back down, and that was here back in August, end of August. So we had this sort of push higher, which went along with the CCI, then a push lower here, but not such a big push lower on the CCI, and then it sort of responded, and then so not so clear cut. Again, not really sure what to make of this, but you can see the bounce clearly here. We've had that, and if I go to the 1 hour, you'll see today's price action even better. So that was a big candle there on the Fed day, which, by the way, if we sort of measured it on the chart, it's what's that, 2.7 drop. So big drop there, and that happened in a single kind of 4 hour period. That was the Fed rate decision period. So sorry, 1 hour period rather, and so that's basically a 2.7 drop because of that. Because prior to that, it was kind of a dead zone. You can see all this very narrow range from 3,970 roughly to about 3,830. Yeah, 140 points. Seems like a lot, but really you can see that if you squeeze, it's not much. So this really moved things along, and then we started this sort of slow drip down lower. We just had this bounce here, and this bounce it's not big by all means. Let's measure it, but it's 1.5% bounce up. So that's pretty nice. So I think that's worth taking a shot at on a trade. My stop is just below that, and that's my target. So we've had a lot today. I was going to say that just back to the daily, I was going to put something else on actually, which I've looked at, and I'm sure you're probably familiar with this, but just very briefly, which is the Euro USD, because it's been absolutely murdered today. Sorry to use such a heavy word. And also the cable, pound dollar, has been absolutely slaughtered. Is probably the only. I've run out of superlatives. Really, it's really just quite incredible. Is the word. So here they are. Maybe if I sort of turn it into something. So let's do the Euro USD in black, so you can see a little bit better. That's Euro USD there. So look at the size of that drop. Now, if you kind of head back to, I was telling somebody on Twitter, because I was trading this last year, and was kind of long, and then started getting this drop here, because we've been in an uptrend essentially prior to that. From the pandemic, we've been in an uptrend through the summer of 2020, going nicely up to these levels, and we got to I think it was 123. 141. In 2021, we were at some point, it was about 123. Let me find that 123 because it kind of stuck in my mind as 123. There, that's 123. So around about here, I think we're in 123. No, sorry, that was actually that was March 2022. So actually, what I'm trying to say is that we were at 123 before the pandemic, more or less. Yeah, before the pandemic. Okay, so before the pandemic it's 123. Then we got up to these levels. Let me just bring that down a bit so we can see. Not sure why I can't take this down. Oh wait, I've got this wrong. I was looking at the cable. I was very confused there. I was like, this is all wrong. Let me go back. Okay, so the USD is in black here. Okay, and the USD is now at 0.9690, so just under 97. And I was right. Yeah, it was 123. I thought I was going mad. So yeah, that was the peak there, 123.34. So that's kind of over 2,700 pips. You know, 123, 0.96. It's yeah, 2,600 pips and counting. So that's pretty huge. That's pretty huge. Cable has suffered similar consequences. So I'm just going to hide the euro there. You can see they're quite similar in the drop. So euro's done badly. But if you look at the euro sort of historically, let's put it on a monthly just to get a sense of scale here. Okay, that's warped. Let me just maybe auto fit. I think everything auto fit. And auto fit. Okay, that's better. So historically, if you look back to, so this is the big kind of channel. You know, I've been intrigued by this for quite a long time. That this makes a channel from the top here. And one of my earliest videos from 2013, I think it was on YouTube, was a long-term strategy on Euro USD. You can watch that. It's my first video. It's a bit fuzzy. I don't appear in it, but it's great. So if I did a parallel channel on this, just to kind of keep things interesting, confirm that, draw the parallel channel, and bingo. All right. So that's my parallel channel there. So I can sort of modify this as much as I want it to. See if I can actually move that. And then maybe that's it. I just want to be able to, for you to see it a little bit better. So that's the, and then take that down to the, so that's kind of to get you the visuals on that. And you've got to agree, I think, that it's pretty intense, this channel. I mean, you know, it's you can kind of tweak it if you like. You know, you can say that this was maybe like that, connects more points, 1, 2, 3, 4, 5. The dip below that, that's probably the better outlook. And this maybe could be more like more like a bit lower here to connect more of the peaks. Yeah, I'd say I'm quite happy with that. So the mean, if you like, the middle point is here, and you can see lots of connections on the October 7, 2017, all this period here, December 18, January 19, February 20. So it's quite a long time spent along this stretch. We had a bounce off it here earlier this year, and now breaking below. So we come into the bottom of that channel. So the next move would be, but overall, from the great financial crisis when we had the big surge there, and then the big drop, we've basically been bouncing up. And this was quite clear to me when I started making that video in 2013. We were kind of moving along this channel, and you know, we sort of, so I was making that channel back then, and then what happened after that, we came to this bottom, and we're kind of moving down within the channel direction generally. Of course, these are thousands of pips. I mean, we're talking, the peak there was 156, we're talking like 157, and you know, we're now at 0.96, so it's pretty severe. And the bottom here was 127, so even that was like 3,000 pips essentially, that from one end of the channel to the other. So one end of the channel to the other is 3,000 pips. Yeah, imagine that. So so we're coming close to the end of that channel, so then we might see a bounce, but it might be a choppy affair like back here in 17. Now you could make the same considerations for the cable, the way it's moved. You can see there's quite a lot of correlation there. There need not be a correlation, there need not be a similarity to the Euro USD. but certainly it's, I'm going to get rid of that there. So certainly it's dropped considerably, and you know, like the euro has not really been to these levels in recent history. So, but people with longer charts than me, and maybe longer memories, say that while the euro has sort of, if you like, been low, the pound dollar has not been this low since 1985. We're actually below those levels. So we're basically not been there for, you know, 40 years and more. And that's the incredible thing historically. It's the historical perspective, and you can't see on this chart it kind of stops there. So just bear in mind that these things have repercussions on you know, real life. So exchanging goods, the cost of exporting, as people will not want to buy your very expensive currency to purchase your product. So that's one impact. Then you've got other imbalances that sort of come with that, which as a non-economist I don't want to try and guess, but I'm sure that there will be examples of that, real life examples. What's interesting to finish with is the S&P monthly chart and the weekly. So the monthly, you can see that we've come off that 4100, as I said before, and we're coming down. We are meeting the we're right at the bottom of that Bollinger Band range, and we generally sort of come to respect it. Now, in the pandemic of 2020, we sort of crossed that and then retreated all the way back in 1 month and then continue higher. We've sort of gone from band to band in a longer period rather than this sort of flush that we saw in the pandemic, which only lasted 2 months and was over. We've been at this since January, obviously, so it's been nearly a year, 9 months. And so it's a slower grind, and we are at the same level on a CCI as back then. So we're not going to get that V shape, but we might get a turn at some point. I'm sorry that I sound like a broken record, but I'm going to repeat that again. In the 2008 financial crisis, we had that, you know, from end of 2007 down to the middle of 2008, September, we got this big push down. So we thought we were done. And we are now at minus 105, so that's the hundreds, which, you know, on a monthly is pretty huge, going below 100. If it's bad on a daily, on a monthly, it's pretty severe. So you can see there aren't many. So we got to the minus 100 there, and essentially in September we continued lower. In fact, we came down to the 100 in March, pushed higher, then came down to basically a negative 200 here in July, bounced up a bit in August, September pushed lower, October we went below the minus 200, which again is pretty severe, and we bottomed in October 2008. But CCI went higher and the index continued to plunge until February of 2009. So that's the dangerous thing. A big wicks here, by the way, large wicks, and one doji in the middle. So we can expect some really dodgy, so to speak, intra-month price action. Intraday there might be more clarity, but intra-month it might end up looking like this, like it can't possibly go any lower, it couldn't possibly go any lower, and it will. So I'm going to finish with the weekly just to show you, if just give you a sense of perspective. So we've had this drop now 3 weeks, 1 up and 2 down. So let's call it a 6-week drop. But gold has been dropping for 6 straight months, by the way. That's quite impressive. And so that's kind of the weekly view, and we've come to the bottom Bollinger Band again. We're not at minus 200, and that on the weekly will not stop in a strong trend. It's not going to stop there, and we've pushed on the 200 a few times now. You know, since the start of the year, we've quickly come close to it in March, then in May, in June. So it's 3 times on the weekly we come to or closer to 200 negative. Now we're sort of coming closer with about 150 negative. So, you know, 132 actually. So, you know, it is going to have an impact when we get to that point, and there's going to be something going on, either a final drop October, but it could be messy. There could be big flushes like today, or kind of the like final stages of a big downtrend where it's just trying to flush out. It's the panic basically selling that comes in unpredictable ways and moments. Maybe it will not wait for data, it will just happen spontaneously and ignore data, because we know now the trajectory, the Fed and everything, so it's not going to be any big surprise. We know the recessionary, we know the 2-year, 10-year yields spread on the treasuries. We know, you know, we know all sorts of things. Inflation not really slowing down. So really, it's a case geopolitical instability, China, and the property market there, and there's so much to worry whoever holds on to positions that I think it's the right time. So with that cheerful thoughts, I will send you off and see you in my next video, which will be next Monday, and wish you a great weekend. Thanks for liking, sharing, take care.